Hello, I'm Eric Pettway, Chief Investment Officer at Journey Advisor Group. Welcome to CIO Corner. We hope everyone had a happy Thanksgiving last week. The market certainly had a celebration last week with the S&P 500 raising 3.7% and the NASDAQ 100 increasing 5%. These gains followed a recent pullback over the previous 2 weeks. The S&P 500 is now approaching record highs, achieving a robust year-to-date return of 17.8% for 2025. Despite a mid-November decline of 5%, the index managed to finish November with a modest positive return. This week, the market's rally may continue as investors await economic data. The November jobs report has been postponed to December 16th after the next Fed meeting. Markets expect a 25 basis point rate cut on December 10th, with CME probability now 86%, up from under 50% 2 weeks ago. Time for the chart of the week. As the holiday season begins, it's the perfect time to pause and appreciate what we have, both in our personal and financial lives. This is particularly important since investors tend to focus on what could go wrong rather than what has gone right. With markets performing well, let's reflect on the past year to gain perspectives as we look forward to 2026. Financial markets have delivered strong returns this year. The S&P 500 has experienced a double-digit return with dividends, while bonds have returned approximately 7% year-to-date. International stocks have outperformed U.S. stocks for the first time in many years, based on indices such as the MSCI, EFA, and Emerging Market Index. Many diversified portfolios have benefited from this broad-based performance. Here are 3 reasons to be thankful as an investor and what they mean for your financial plan in the year ahead. First, we can be grateful that financial markets have performed well this year despite occasional stumbles. This bull market cycle began after the market bottom in October 2022 and is now entering its 4th year. While past performance is no guarantee of future results, history shows that bull markets tend to last much longer than bear markets, often 5 to 10 years or more. This resilience underscores an important principle. Trying to time markets around short-term events is difficult and can be counterproductive. Remember the April tariff announcement? Markets fell close to bear market levels, only to rebound quickly and rise to new all-time highs. Investors who remained disciplined were rewarded, while those who reacted to headlines may have missed opportunities. Second, we can be grateful that inflation has improved, even if progress has been slower than many would prefer. Prices have risen about 3% over the past year, which continues to be a challenge for households. However, from an investment standpoint, fears of runaway inflation have faded. This has allowed the Fed to begin cutting interest rates after keeping them at restrictive levels for most of the year. The Fed is also responding to a job market that has been weakening since the summer. Historically, lower rate benefits both stocks and bonds by reducing borrowing costs while making existing bonds with higher interest rates more valuable. While inflation and interest rates will remain important factors for markets, the worst fear appeared to be behind us. Finally, we should appreciate the importance of ongoing risk management and proper asset allocation in your portfolio. The year ahead will likely bring new sources of uncertainty, as every year does. Questions about artificial intelligence will persist in 2026. It's natural that the effect on stock prices is difficult to predict, given the transformative nature of the technology, similar to how the internet revolution unfolded beginning in the mid-1990s. Political volatility is also likely to continue, with ongoing discussions around tariffs, geopolitical concerns, and the national debt. Recent history underscores that reacting to these events is not only counterproductive, but can derail financial plans. Your portfolio is positioned to benefit from innovation and growth while managing risks. We hope the CIO Corner and the Chart of the Week are helpful in these uncertain times. If you enjoy JAG's content, follow us on LinkedIn or your preferred social media channel. If you have concerns or want to review your portfolio, contact your JAG team to discuss your goals and stay on track. And remember, remain calm, stay focused, and most importantly, stay the course.